architecture that you have all the electrical and high voltage and motors and all of that almost below the center of gravity of the vehicle,
right,
you say lowest probability of reduced rollover risk.
Yeah,
and that like, significantly benefits.
I think architecturally we have Newton on our side.
Correct.
And having Isaac Newton on your side is definitely the way to go.
Okay, exactly.
Elon is joined by Dr. Reedy, who's one of the chief engineers at Tesla on safety systems.
Tests, actually 4 tests, for 1 frontal, 2 side, and 1 rollover test. And if you look at, we have been calculating.
And they were talking about how they find the weakest point in the car, and that's where they focus their attention on in order to make it safer. And because of that, the rest of the car overall is very safe.
Exactly. So if you look at there is a matrix we came up with, which is a part of US NCAP rating itself as the lowest probability of injury. and Model 3 has the lowest. And just to give you a context, there are a total of 900 plus vehicles since 2011 which have been rated. So the fact that Model 3 is the best among all the 943 to be exact.
Right.
So that speaks the volume. And I'm very happy to say that Model 3 has achieved. We are not stopping right now.
Yeah.
What we would like to do is next is how we can make use of the active safety and autopilot features and make it even more improvement. So the next area that we're focusing on, how to integrate active and passive safety. That's our next area of challenge, which we will improve for sure.
Yeah, it's worth noting that the safety extends to not just people in the car, but also pedestrians.
Correct.
Yeah, so...
He's going to talk about the roof now.
Not having a big engine block in the front of the car is really helpful, because if the car were to hit a pedestrian, we'll get to active safety next, because the best thing is obviously not to hit a car or pedestrian. The fact that the hood can dent so far in is really helpful, because it ends up being like a trampoline, or you don't have a rock underneath it. It's very helpful. So it's helpful for pedestrian safety and for the safety of people in the car. And then even if you have like a head-on collision with another car, the extended sort of crumple zone of a Tesla Model S, X, or 3 is helpful to the people in the Tesla and the people in the other car. So it's not just the people in the car.
I'd like to add one item, which is essentially how we look at the real-world safety, which has always been an important element for Elon. So if you look at our blog post, we showed how we handle the center pole impact in the front wheel. By the way, that's not part of NCAP rating. It is just to show how we go over and above the NCAP rating to make sure it's real-world safety.
Yeah.
One thing you may not be realizing is that the hood on a Tesla is designed to absorb the impact of a pedestrian that hits. So if somebody hits somebody on the car, the hood actually will elevate like that automatically. It's not widely known.
Obviously, we're all in these cars. Our friends are in these cars, families in the cars, so we care a great deal about safety. And a lot of people think safety is boring, but not at Tesla. So, thanks, Van. Thank you for your decade of hard work and the rest of the Tesla safety team. With that, let's move on to the Autopilot, and if you guys could just give an update on sort of Autopilot software, AI, and hardware. Yeah,
that's great. This is Stuart Bowers. We'll soon begin to roll out the team's most advanced Autopilot feature ever, Navigate on Autopilot. In our last release, we launched a new set of neural networks that combined together provide a view of everything happening around the car. With Navigate on Autopilot, we'll use information to understand exactly where the car is on the highway system and to automatically change lanes, handle forks, and take high curvature exits to follow a nav route. Initially, it will require drivers to confirm lane changes using the turn signal before the car moves into an adjacent lane. Future versions will allow customers to waive the confirmation requirement if they choose to. One area that I'm personally really excited to build on with this improvement is active safety. With the advancement in neural networks covering 360 degrees of view around our car, we can provide a level of constant vigilance that humans just can't. Ultimately, this should allow us to warn and even intervene for an enormous percentage of modern accidents and to ship these improvements as software upgrades to our existing customers.
Drive on Nav is a huge update coming to Autopilot and is the first step forward towards full self-driving. We're going to start seeing some big updates on that soon.
A pedestrian or another car from impact. This happens all the time.
All the time.
Yeah, all the time.
Yeah,
literally every day. It's like pretty crazy.
Yeah, the team's done incredible work here, and by bringing up more of the cameras around the car, we can detect things as they come toward us, not just directly in front of us.
Yeah.
Pete?
Oh, hi, this is Pete Bannon. The Hardware 3 design is continuing to move along. Over the last quarter, we've completed qualification of the silicon, qualification of the board. We started the manufacturing line and qualification of the manufacturing line. We've been validating the provisioning flows in the factory. We've built test versions of Model S, X, and 3 in the factory to validate all the fit and finish of the parts and all the provisioning flows. So
that's encouraging.
We still have a lot of work to do, and the team's doing a great job, and we're still on track to have it ready to go by the end of Q1.
Great. And just that'll be on roughly 1,000% increase in processing capability compared to the current hardware. So it's obviously a giant improvement, despite being it costs about the same. Cost, volume, and power consumption are approximately the same as the current hardware, but is a tenfold improvement in frames per second.
That's right.
And improved redundancy as well.
Just so everyone knows, the hardware that they're talking about is what's going to be going into production in approximately 6 months. If you want this on your car, you have to pay for full self-driving. You will not get this upgrade for free, even if you buy enhanced autopilot. It requires full self-driving.
This is a simple change that takes less than half an hour in service to upgrade the computer. And so anyone will be able to upgrade their computer to full self-driving capability, or upgrade their car to full self-driving capability with a simple service visit. So we expect all cars with the hardware 2 sensor suite, basically anything made in the last roughly 2 years, will be upgradable to full self-driving.
Yep. In fact, a lot of the cars we're using for testing today have in fact been upgraded from hardware 2.
Right. So it's very important to emphasize, like, people shouldn't, it's like concerned that people would want to wait until that comes out, but there's no need to wait until that comes out, because it's just a very simple plug-and-play change to get to the full self-driving. Anyone who's paid for the full self-driving option will just get it done for free. And anyone who still wants to order full self-driving at this point, it's just an off-menu item. You can still order it, but we took it off the order menu just because it was really creating a lot of friction in the sales process, and people didn't understand the difference between enhanced autopilot and full self-driving. So just to simplify the order process, we took that off. But anyone who asks for it can certainly get it.
That, of course, explains why they took it off the configuration menu for the time being. So you can still order full self-driving, you just have to do it after the fact.
But to be clear, there's definitely no need to wait until Q2 to order a car. We want to make it just a completely seamless process. So there's no advantage to ordering now versus Q2. Andre, do you want to?
Yeah, certainly. Hi, everyone. My name is Andre Karpathy. I'm the director of AI here at Tesla. And my team trains all of the neural networks that analyze the images streaming in from all of the cameras for the Autopilot. For example, these neural networks identify cars, lane lines, traffic signs, and so on. The team is incredibly excited about the upcoming upgrade for the Autopilot computer, which Pete briefly talked about. This upgrade allows us to not just run the current neural networks faster, but more importantly, it will allow us to deploy much larger, computationally more expensive networks to the fleet. The reason this is important is that it is a common finding in the industry, and we see this as well, is that as you make the networks bigger by adding more neurons, the accuracy of all their predictions increases with the added capacity. So in other words, we are currently at a place where we've trained large neural networks that work very well, but we are not able to deploy them to the fleet due to computational constraints. So all of this will change with the next iteration of the hardware, and it's a massive step improvement in the compute capability, and the team is incredibly excited to get these networks out there.
Great, thank you. And I've said this before, but I think just talking a bit about the kind of longer-term future. We absolutely see the future as kind of as sort of a shared electric autonomy, so that you'll be able to do ride-hailing or share your car in any way. Sort of long-term model that's probably some combination of like Uber, Lyft, and Airbnb. In other words, there'll be Tesla dedicated cars for ride-hailing, and there'll be and any customer will be able to share their car at will, just like you'd share your house on Airbnb. So it's a combination of those two models. I think is pretty obviously where things are headed long term. The advantage that Tesla will have is that we'll have millions of cars in the field with full autonomy capability, and no one else will have that. So I think that will end up putting us in the strongest competitive position long term. And then, Laurie, can you finish off with talk about factory safety? And thank you for the hard work of you and your team. I think we've made great strides. And yeah, please go ahead.
Yeah, thanks. We have the safest cars made by the safest people.
Okay.
So it's an exciting time here at Tesla. All car and manufacturing factories have injuries. at Tesla, we have a commitment to zero injuries, and our target is actually on good reporting. So we have good reporting of injuries, good reporting of near misses, good observations, and lots of improvements. So to be the safest company in the world, we have to be committed to that, and everybody here is. So we're actually steadily getting there, and we're not going to stop till we're there.
Absolutely.
So
so you maybe mentioning, like, for example, like we have had like some, sort of for example, like we do get these like quite unfair, accusations. For example, one of them was like that we were underreporting injuries.
Correct.
And it's worth noting that OSHA completed their investigation and concluded that we had not been doing anything of the sort.
Correct. The factory here had a 4-month-long Cal OSHA investigation, and it basically proved that we are recording properly and doing as we should be. So it's much different than what you would read about in the press.
Yeah, this is true.
Yeah, I'm very proud of the team for that. It's one point I think people don't know is I've been here about a year now. Time flies when you're having so much fun.
It was like 12 years.
I know. But when I joined, we were already really a fraction. Our injury rate was a fraction of what it had been when Toyota and GM ran the factory in the NUMMI days. So what we're all about is really continuing to make improvements from there. And what's also important is not to have serious injuries, and that's extremely rare here at Tesla. We have really strong focus on prevention and also using mitigating controls so that these types of injuries don't occur. I mean, most of the injuries that we have are muscular sprains and things like that.
Yes, it's essentially it's muscle strain and getting scratched.
Exactly.
That's most injuries, yeah.
Hand and finger cuts and sprains.
Well, it's better. A couple years ago, they had a
leg
amputation.
A few things that my team has been working on, along with all the leaders here. First it's people and engagement. So one of the first things is meeting with you, Elon.
Yeah.
We meet with you on a regular basis. We meet with all the production leaders. So it's full-on engagement on improving safety. We have built a really strong EHS team, the best and the brightest. And our EHS team is actually embedded into the line on the factory because we learned a process and we learned the people. You don't know how to improve unless you're out there on the line, on the process, engaging with the associates, listening and learning from our associates. So we have really strong engagement, health and safety committees. We do find it, fix it walks. Our leaders are out there walking and also looking for improvements. And actually just this quarter, we had over 15,000 improvements. I mean, that's like amazing. So very, very exciting about that. We also look at risk reduction and in human performance. People are going to make mistakes, so we're going to design in so we fail safely. We have an early symptom intervention program. This is where we have industrial athletes go out on the line and work with our associates before anything happens. Like if you have a pain, let's work it out, let's strengthen and really get our employees fit. So we're doing that. We've also just opened a new and improved health clinic. So when injuries do occur, we get the absolute best care for our associates. And it's actually overseen by one of California's leading orthopedic surgeons. And we did that because most of our injuries, like we said, like 85% are those sprains and strains. So now they get that best care here on site. And we have 24/7 care. It's actually staffed by 3 full-time doctors and nurses. And I'm really super happy with the care they're giving, and I think the employees are as well. And the third...
We're going to expand on that.
Yes.
So the Tesla sort of health clinic, both at Fremont and at Giga, is that we have a really immediate first-class health care available right on the spot when people need it. And this is not just for workplace. This is for workplace and non-workplace.
I know, that's super exciting.
Yeah. If anything goes, if you become injured or ill for any reason, then there's healthcare immediately on site.
That's where we plan to go. Exactly. And then finally, just being proactive, because that's what we're about, innovation and proactive. I mean, we've joined national safety organizations. We partner with with many leading universities, including California, Berkeley, Center for Occupational and Environmental Health. We do presentations there. We work with the automotive industry and do benchmarking all the time. We're always looking and bringing people in to look for things that we can do better and for new technology and innovations in safety. So, and with all of that, we have made improvements in our injury rate. We are more than 10% better year over year in our lost work days and our days away. But the most important thing is we're also getting all those good engagement observations. They're moving up. So injuries down, observations, engagement up.
All right, awesome. Thank
you.
Thanks, Lori. We'll provide regular updates on workplace safety, and our goal is unequivocally to have the safest factories in the world where people look forward to coming to work in the morning. So it's like, yeah, that's our goal. All right. With that, we can move to questions.
Cool. Well, thank you very much. Cherie, let's go to the first question, please.
Thank you. Our first question comes from Dan Galvis with Wolfe Research.
Hey, thanks for taking my questions. Congratulations on the quarter. It's really amazing to see this landmark quarter after covering the company for so long. And thanks for bringing some of your team onto the call. It's very interesting. My question is about cell supply. There's been some noise about tight cell supply and sparks and tight labor supply. Like in the short term, could you just talk about whether demand is outpacing supply of battery cells and kind of what's your plan for long-term expansion, including cell supply in China?
JB, you want to take it?
Sure, I can speak to that. This is JB. We have had a period where the supply was fairly tight for Model 3, but it did not really constrain the Model 3 production in any significant way.
Like for a week.
Yeah, maybe for a few days.
Yeah.
The impact was larger felt on the energy products.
Yeah.
And that still is somewhat tight, but we do, as we pointed out in previous discussions, we do have third-party supplies of energy cells, so that production can continue even independently of the Panasonic supply in Sparks. So that's been very helpful, and that is expanding in future quarters. And also the Panasonic supply is expanding. The productivity of existing lines is continuing to improve with a lot of hard work from the engineering teams and just operational stability. And we continue to bring online new production lines. So even just in the last several weeks, we've started up yet another cell production line with Panasonic, and through the end of the year, there's another line coming on, and then one shortly after that. So there's a steady increase in the total supply that should keep us ahead of even Model 3 growth, and also should let us have a larger percentage of energy supply be sourced from Giga locally.
Yeah, we are making a pretty nutty amount of the world's lithium-ion batteries. And Martin, I think we're, at 60% or something?
Yeah, so at the moment, if you look at, for example, for Q3, all electric vehicles made around the world, their total battery capacity was about 20 or 19 gigawatt hours, and what we produced in Q3 was about the same or a little bit higher.
Okay.
So about half of world's batteries, basically.
Well, and is that because we also source cells from Japan and elsewhere? Is that you talking about just Giga or?
Yeah, so just the Giga itself is about 20, and on top of that, SNX is I don't know, another 4 or 5.
Yeah.
Got it. No, it's a huge advantage. Is there plans that you can talk about for cell supply in China? Will that be produced in China? I'm assuming so.
Long term, it would be produced in China. Short term, we're not certain of the short term situation, but long term, certainly.
Got it. Okay. Thanks very much.
Thank you. Let's go to the next question, please.
Thank you. Our next question comes from Pierre Ferragu with New Street Research.
Hey, thank you for taking my question. I was very surprised in the numbers you reported today by your gross margin performance on the Model 3. So if I remember correctly, you were expecting more of a 15% type of margin for this quarter, and you actually did better than 20%. So Can you take us through what improved like faster and better than you had initially anticipated in the manufacturing line, and where these improvements came from?
Deepak here, and Jerome and others, please feel free to join. Our improvements on the cost side were in every aspect of cost. So clearly, our manufacturing labor hours improved significantly. Our overall manufacturing costs dropped almost 30% sequentially Q2 to Q3. We produced more volume, so we had better fixed cost absorption. We had far less scrap. Our yield on each of the lines across both factories improved significantly. And as we look forward, we see even more opportunities. We are going through this phase where we are now stabilizing production, and the team can now intensely focus on cost optimization, and that trend will just continue in Q4.
Yeah, I think we're also being relatively on the conservative side when we predicted. When we said like 15, so we're being
right. Our expectation was we would do better, but we wanted to be conservative. You're right. Yeah, in terms of our guidance that we gave for Q3.
Yeah.
Okay, thanks. That's great. And then on as a quick follow-up, you've announced over the weekend like a mid-range car with a smaller battery pack. And I was wondering, as you're looking at expanding production of the Model 3, I think about it as you had two options. One was to go abroad and to keep producing a higher end, higher ASP cars, and the other one was to go for a lower cost car and stick to the US. So how did you decide the sequencing of these two things? Why is a lower car now and going abroad only early next year?
Well, we're trying to provide the most affordable electric car options that we can, and since we just don't have the ability to get to the $35,000 car right away, we thought this might be a way to offer it as an intermediate step, and that's really it. We expect to start producing in significant volume for Europe in January. And obviously it takes some time to ship, so deliveries, probably pretty significant deliveries in Europe, kind of in the late February, March timeframe, because cars have to get all the way from California to a customer in Europe. For us, the car only counts as delivered if it reaches the end customer and all the paperwork is completed correctly. So it's the highest possible standard for considering a sale. Yeah.
And also to APAC, you start delivering cars.
Yeah. We may or may not deliver cars in APAC in Q1, but certainly in Q2. It'll be kind of borderline as to whether a car is delivered in APAC by the end of Q1. So I can't say that for certain. They're definitely in Europe, and then definitely in APAC in Q2. Yeah.
Okay, let's go to the next question, please.
Thank you. Our next question comes from Romit Shah with Nomura Instinet.
Yes, thank you. I guess just along those lines, you indicated that you're going to bring Model 3 to Europe early next year. Where would you like to see production in order to support that ramp overseas?
Well, initially production will occur. I mean, at least the next several months, vehicle production will take place at our car plant in California.
Sorry, I meant to ask, where would you like to see the production rate on a weekly basis go to in order to support that ramp?
It's hard to predict with accuracy. And there's also like all the tariff wars and everything. So long term, like you say, like without talking about like next quarter, so like what is likely global demand for Model 3? It's probably on the order of anywhere from 500,000 to 1 million cars a year, let's say, global demand for Model 3. If you look at something like, say, the 3 Series, that's around 500,000. But the BMW 3 Series is about 500,000 a year globally. And generally, we find that we outcompete the BMW 3 Series quite well. So it seems like logical, therefore, that we would long term have a higher production or higher demand. Maybe it's somewhere in between the kind of the BMW 3 Series and the Volkswagen Golf, which is about 1 million units a year. So yeah, that's why I say anywhere from 500,000 to 1 million units a year long term.
And do you have to add new lines to support that, or are you just going to continue to remove bottlenecks in the existing lines?
No, we're definitely going to do local production in China. We're moving rapidly on that. So we're aiming to have Model 3 production for the China market or the greater China market active certainly next year. It will be happening next year. But it will be done in a very capital efficient manner, much more akin to the way we did General Assembly Line 4 versus General Assembly Line 3. And then we'll also have a factory in China, in Europe long term, because it's pretty silly to make cars in California and ship them all the way to Europe as far.
Especially in high volumes.
Yeah, exactly. Especially if it's I'm not talking about the S and X, I'm just talking about the 3. So S and X will continue to be made in California, I think probably exclusively here. But for cars where we're trying to maximize affordability, it makes a lot of sense to produce those cars, at least on the continent where they are consumed or bought.
Okay, let's go to the next question, please.
Thank you. Our next question comes from George Galliers with Evercore.
Thank you. Maybe just following up on the previous question, is the target still to produce 10,000 Model 3s a week in Fremont? And I think you mentioned in the past that once you got to a run rate of around 5,000, you'd be better placed to assess what Capex is required to get there. So as of today, do you have a better idea of what Capex is required to get to that kind of level at Fremont?
I think we're not prepared to speak to that right now, except that it will be considerably less than money that we've spent to get to 5,000 in the first place. I think quite dramatically less. So I'd probably see a path to like 7,000 units a week for Model 3 with really minimal Capex.
Very minimal.
Yeah, Jerome, with very minimal to get to 7,000 a week. And then, that's really just basically improving the uptime of the existing lines, and we can do 7,000 a week.
Exactly,
yeah. So, and then it gets a little harder as you start to go above 7,000. We would need to at least bring lines down in Fremont for significant upgrades to get to 10K, but also we're not talking about massive amounts of Capex. But if it's say like long term, long term if predicting things on a quarter by quarter basis is very difficult, because when you have an exponential growth rate like we do, if you look at Tesla cumulative deliveries over time, it's like the cleanest exponential curve fit that I've ever seen. So, but small movements in calendar time can look like a very large hit or miss one way or the other, because it's such a steep curve. That's why it's always tricky to predict things on a quarterly basis, but a lot easier if you go out, a year or so. Probably long term, it's at least sort of 7,000 to 10,000 cars from Fremont of Model 3, and then I don't know, 5,000 to 8,000 in the rest of the world, something like that. This is a guess.
Okay, thank you. And then just as a follow-up, in the letter you do point out that the size of the European market for premium mid-size sedans is roughly twice that of the US. Could you also maybe just comment to what your expectations are for mix in Europe? Based off Model S and Model X, do you expect richer mix in Europe versus the US, or is it fairly similar?
We're giving that zero thought. I mean, this is not. I have no idea. I don't know, Martin. Do you have any idea?
No, all I'm aware of is that because of cold weather, probably all-wheel drive and long battery range will be highly demanded in Europe. But apart from that, I mean, we ultimately have to start selling the car to see what the demand is. So.
Yeah, I mean, it seems like it's likely to be comparable to if mid-size sedans market is like twice as big in Europe, then it's likely to be at least as much demand in Europe as there is in North America. Like that's a pretty safe bet. But our goal really is to make electric cars that everyone can afford, not to sort of mine high option value cars. It's like if we could produce a $35,000 car today, we would do it. We need more work. There's more work to do before we can make a $35,000 car and have it be positive gross margin. We're probably less than 6 months from that, but that's our mission.
Great. Let's go to the next question, please.
Thank you. Again, ladies and gentlemen, if you'd like to ask a question at this time, please press star then 1. Our next question comes from Maynard with Macquarie.
Hi, thank you. Congratulations on a great turning point for Tesla. As you continue to scale the business, can you talk about how we should think about how you balance profits versus reinvestments? You're targeting sustainable GAAP profitability and cash flow, but I'm curious if there's a level of GAAP profitability or GAAP operating margin or cash flow you want to hold and then take the excess to fund new growth or accelerate opportunities?
Sure. I mean, maybe if characterize that question, it would be like, are we starving new vehicle development in order to achieve GAAP profitability and cash flow positive? Would that be inaccurate? Is that essentially like the answer is no. So we've made significant progress on the Model Y. And so in fact, I approved the prototype to go into production recently. It'll be 2020 before that's in volume production, but we made great progress there. We'll also continue to make progress on the Semi and the newer Tesla Roadster. And then actually the product I'm personally most excited about is the Tesla pickup truck. So I think that's going to be some next level stuff there. And then I should not forget to mention the solar tile roof. We'll also start getting into volume production of the solar tile roof next year. That's quite a long development cycle because anything that's a roof has got to last 30 years. So even if you do accelerate life testing as fast as possible, there's still a minimum amount of time required to do that. And there's a lot of engineering that goes into how do you put on the solar tile roof and not be really labor intensive in doing so. So there's a lot of engineering, not just in the tile, but in the way it's done. And then we've got continued improvements in Powerwall, Powerpack, other energy products. I think we've got the most exciting product roadmap of any company on Earth by far. I'm not even sure, probably twice. I don't even know which company would have a better product roadmap, or even close. Yeah, maybe they do, but I don't know about them.
Great. And when you talk about Tesla having its own, ride-sharing fleet or giving the people the ability to loan out their car like an Airbnb model, I'm curious if your long-term plan is to build a platform that's going to enable companies to write applications to turn the car directly into an application. And then can you also maybe just talk about that business model? Is that should we be thinking more about like a revenue sharing model, sort of like how Apple takes a piece of revenue generated for applications from iPhones? Thanks.
I don't know about turning the car into an application exactly, but I mean maybe. We'll try to do the thing that maximizes usefulness. And so if there's a way we can think of where third parties could do something, then that could make sense. But I do know for sure that Tesla will operate its own ride-hailing, its own ride-hailing service. Will compete directly with Uber and Lyft, obviously, but then also have the ability for customers to offer their car and add or subtract their car to the fleet at will. So there'll be a company-owned fleet, and the company-owned fleet will just be where there aren't enough customer cars to be lent out. So if we find like in a particular metro there aren't enough customers who are willing to add their car to the shared fleet, then that's where we'll supplement it with a Tesla-owned fleet. So that's why it's a sort of a combination of the Uber, Lyft thing and Airbnb, and then we would charge something probably comparable to how they say the App Store works, or I don't know, we'd charge 30% or something in order for somebody to add the car to the fleet. I think that's like a pretty sensible way to go.
Great. Let's go to the next question, please.
Thank you. Our next question comes from Adam Jonas with Morgan Stanley.
Thanks, everyone. First question is on governance. As the company conducts its search for a new chairman, what are the attributes and experiences of that person that you think would be a best fit or best value for Tesla?
Actually, on this call, we're going to restrict questions to operational topics. Do you have
no problem. Yes, I do. Can you tell us about the folks who are taking deliveries of Model 3? What are the top car models or brands that they're trading in or switching out of? How many are new to the brand? Anything you're prepared to share, and then I have a follow-up.
Sure, absolutely.
Hey, this is Martin. So I've done the analysis of all the trade-ins that we've received, and really the only pattern that I've seen is that it's sort of all across the board, and the vast majority is non-premium brands. I think that is the number one message. It's just that more than half of the trade-ins we received were priced at below $35,000 when new. But other than that, there's no real pattern. I haven't noticed anything worth highlighting other than it's just a lot of people upgrading their cars quite dramatically.
Which is a huge upgrade.
For most people, well, maybe for most, but for many people, it is the most expensive car they've ever bought. So they're clearly demonstrating with their money that they're willing to spend extra money to get a Tesla. So, like Tesla is essentially like mass market premium.
The price walk is way beyond the federal tax credit. So clearly there is value in the product that they are perceiving, whether it's cost of ownership, whether it's sustainability, whether it's the brand or the product
safety,
and the safety. All of the above is making a large number of customers jump up significantly in their purchase price.
Yeah, I mean, really, honestly, the top reason to refer a friend to buy a Tesla is going to keep your friend safe.
That's a good reason. If I can just squeeze in, since I couldn't ask the first one that you could answer, do you think that the third quarter is a milestone, Elon, where you think Tesla becomes sustainably self-funding and perhaps not in need of outside capital? Thanks.
Yeah, that is our goal. We do not intend to raise equity or debt. At least that's not our intention right now. That may change in the future, but the current operating plan is to pay off our debts, and not to refinance them, but to pay them off, and reduce the debt load and overall leverage of the company. And I've actually almost forgot one quite important thing. And this is quite helpful. Why it's helpful to have these sort of crisis situations with logistics, for example. As I dug into inventory, like basically finished product inventory from factory to the customer, I was quite surprised to see how long that took, and that it was quite expensive in a lot of cases to get cars to customers. This was something I didn't fully appreciate before, and we really have a major initiative at Tesla to get the average time from a car exiting the factory to receiving the check from the customer, being in the customer's hands. To be clear, we only get the check when we get the car to the customer. So getting a car from factory to customer, to get that to be as short as possible. In August, the average time in North America to get a car from the factory to a customer was 30 days, which is embarrassingly long. By the end of the quarter, we had reduced it to around 20 days, and our goal in Q4, this is a goal, not a promise, but our goal is to get the average time of a car from factory to customer under 10 days. This is a giant improvement in the capital efficiency of the company, because we're making on the order of $75 million worth of products per day, of cars per day. So every day it requires $75 million worth of capital. So every 10 days is $750 million. And we obviously have a loan from the bank that we can make use of, but the banks will only loan us 85% of the cost of the vehicle, which translates to about 70% of the price of the vehicle. So, and then we've got this loan outstanding, which effectively increases the COGS of the car, and then dilutes the company to the tune of 30% of what of the inventory of the finished goods in transit is. So that this is really like tightening that and getting that below 10 days in North America, and then also improving dramatically the transit time to Europe and Asia. This is where like having local factories is actually very important for the capital efficiency of the overall system, because I think over time we want to get the time from a car going from factory to customer under 7 days worldwide, and then the terms that we have from our suppliers are on average just over 60 days. Now our parts inventory management also there's a lot of room for improvement there. I think we'll probably cut that down to a few $100 million or so of debottlenecking, something like that, maybe $200 or $300 million of parts at the factory. So then effectively what we're going to do is reverse the working capital requirements of the company quite dramatically, to the point where the faster we grow, the more capital we have. This is incredibly important for capital efficiency of the company. It's night and day. Deepak, is there anything you'd like to?
No, I think you are totally, we're reducing our raw material inventory on one hand by keeping the production stable, finding efficiencies in warehouse management and supply chain, and at the same time reducing the time to deliver the car and convert that car into a cash, and that significantly improves working capital needs.
Yeah, it's really quite dramatic. So, yeah, I think this sort of profoundly changes the financial effectiveness of Tesla.
Yeah, we reduced our inventory in Q3, which helped. And, although we had higher payables higher receivables because the quarter ended on a weekend, we won't have that in Q4. So all of this should continue to help us in Q4 and beyond, the working capital gain.
Yeah, I mean, it occurred to me that even if this was the only thing that Tesla did different, was to shorten the time from factory to the end customer. In any given company that did that would outcompete all other companies over time. It would not be a contest.
Great. Thank you very much. Let's go to the next question, please.
Thank you. Our next question comes from Tony Sacconaghi with Bernstein.
Yes, thank you. I have one for Deepak and then a follow-up, please. Deepak, the OpEx expense management was very strong in the quarter. I think it was down 13% sequentially, and OpEx was only up 5% year over year, despite revenue growing 71%. So on that front, I mean, in hindsight, did you get too bloated and needed to get more right-sized? And looking forward, how do we think about OpEx growth versus revenue growth on kind of a more normalized basis?
Yeah, Tony, so excluding one-time items, our OpEx decreased sequentially by 5%, to just clarify that, first of all. And a lot of that was driven by the actions we took in Q2 to be more efficient with our employee headcount. We benefited from that in Q3. And we were really careful in terms of all of our spending. The other piece that helped us is a lot of our Model 3 spending on expensed sort of R&D is reducing because Model 3 is going into production. So Q2 to Q3, we saw a reduction there. And it just gives you the sense of the leverage our operating expenses can have while our revenue is growing dramatically. So our OpEx will increase in the future, but at a far slower rate, and we will continue to be really, really careful about the spending. And I think there are actually more efficiencies that we can find.
We are going to find them,
right.
Absolutely.
So we'll continue down that path.
Definitely.
Okay. And then thank you for that. And then to follow up, I was just wondering if you could help us a little bit on the back to the gross margin on Model 3 and the $35,000 car. So, this quarter, I impute that Model 3 ASPs were maybe $59,000, and that might suggest that gross margins on a $35,000 Model 3 might be about zero. And Elon, I think you alluded to the fact that the goal is really to get positive gross margins on a $35,000 car before shipping. Are those all fair assessments? And I guess the question is, where would a Model 3, $35,000 Model 3 be in terms of gross margins today, and where does it need to be before you want to offer it broadly to consumers?
Yeah, I mean, it's the challenge with answering questions of that nature in detail is that it is a rapidly changing situation. So, like, literally, if you would ask this in a month, it would be different. Another month, it would be different. There's no question we need to get to the point where we can sell a $35,000 car and where the full accounted for COGS of the car is, let's say, on the order of $30,000 or slightly less than $30,000. Like, I think we'd want to ideally get the COGS of the car of that configuration of car under $30,000. That would be that's our goal. That's what we're pushing very hard to achieve.
Exactly, and it's a matter of time. There's a significant material cost reduction that comes. You have a smaller battery pack, so a fewer amount of cells. Yeah. It's not the same cells that we have in the existing cars.
Well, it's the same cell, but it's not the
same amount of cells. So cell cost.
Fewer cells, and
right.
And then the non-cell portion of the pack is also cost reduced.
Exactly.
With the current mid-range pack, it still has basically about the same non-cell portion of the pack cost.
Exactly. And we are achieving massive reduction in all our manufacturing costs per car, which will continue. And as volume grows, that also helps us with fixed cost absorption. So it's the same factors that have helped us so far will continue to help us going forward to get us there. Anything you want to add, JB? No?
Yeah.
Great. Let's go to the next question, please.
Thanks, you. And next question comes from James Albertine with Consumer Edge.
Great. Good afternoon, and thanks for taking the question. Congratulations.
Thanks.
Wanted just a point of clarification. Elon, you mentioned in August, the time to get the car from a factory to a customer was 30 days, down to 20 at the end of the quarter, and your goal is under 10 by the end of 4Q. Where do we see that flow through from a COGS perspective? Is that in automotive gross margin, or is that in services and other at this point?
It's all in automotive gross margin or logistics costs outbound.
Outbound logistics,
it's all
essentially.
in COGS for automotive.
Yeah, I think we'd see a reduction in inbound logistics as well as outbound logistics. Maybe the question is like for the debt that is carried for that period of time, is that factored into COGS or is that not?
The interest expense of the debt, that's in the interest expense line. So that is not in COGS.
Okay, yeah, that's why I do think like the definition of COGS should probably be broadened to include anything that's directly driven by volume, essentially that affects the marginal cost of the vehicle. So although that is not officially in COGS, in my opinion, it probably should be, is to take the ABL interest expense and apply that effectively to the cost of the car.
And from a broader sense, you're looking at it as the cost of doing business, which can be avoided.
Yeah. Just essentially cash availability increases quite dramatically. Dilution or leverage outside of the ABL line improves dramatically. And then the effective cost of the car also reduces because you do not have the interest expense. If you have the interest expense over 20 days versus 10 days, this is a big difference.
Yep.
Understood, and I appreciate that clarification. Sort of was trying to get at, you've been running a negative gross margin in services and other for several quarters now, and wanted to get a sense for, when that could maybe drop and start to turn a corner and to generate some profit for you. I understand there's a lot of building out going on for sales, service, and charging infrastructure. But if you could give us some kind of clarification there, that would be, I think, helpful. And if you're willing maybe to provide an update on where you stand today in terms of battery costs. I know your goal of a sort of parity with ICE vehicles, but maybe an update if you're willing to provide on where you stand in that trajectory. Thanks.
I think over time, every quarter progressively, we will see an improvement in the service and other business as our revenue continues to grow and the size of our fleet grows. It's as simple as that.
Yeah. Long term, I would expect service to be a significant revenue item and to be a positive margin contributor. And it's going to be a function of our fleet size
and age.
Yeah, and
essentially
we're under warranty now. Yeah, we're under warranty. There's like a lot of stuff that's under warranty, but as the warranty expires, so there's like non-warranty items, then we would expect service to be positive gross margin.
And that also includes our used car sales.
And
our used car sales is continuing to grow, and they have a healthy margin. And so that overall business for mature companies is in some cases more profitable than new product sales. I'm not just talking about OEMs, auto OEMs. And we are at the early stage of our growth here, and as our fleet size grows, there are just so many opportunities in that business that it's a matter of time, as I simply said.
Yeah.
Okay, and on the battery cost, there was a question.
Well, that is a key sort of a competitive metric. So I think it's safe to say we're much better than anyone else by a lot, but we prefer not to give a precise number.
Okay, and now let's go to the last question, please.
Thank you. Our final question comes from Phil LeBeau with CNBC TV.
Thank you, guys. Elon, quick question. In terms of as the federal tax credit starts to be phased out as your sales cross over the threshold, what kind of an impact have you guys modeled into how much that might slow down potential sales?
We don't expect this to result in yes, the sales tax or the tax incentive in the U.S. Drops in half at the end of this quarter, but then we also start shipping to Europe and then start shipping to Asia, and we certainly do not expect anything that would cause our production to drop below, let's say, a minimum of 5,000 cars a week.
But in terms of in the United States, do you expect that it'll slow down demand and sales within the U.S.?
I think that as we're able to offer lower cost versions of the car, that we would expect demand to sustain in the U.S. But I want to be clear, like, it's not like we're holding back this lower cost version of the car intentionally. Just like with we're just like, is there anything we can do to provide a lower cost car now? And that's where we came up with the depopulated long range pack. Just like basically having a long range pack with fewer cells. Like, we really care about providing the end customer with the most affordable car that we can possibly produce, the best viability. And if we could do the smaller pack now, we absolutely would. It's just going to take us, I don't know, at least 3 months to get the production going, and then you got to spool up production, and that production's got to go to, we've got to make the packs got to go to the vehicle factory, the cars are got to get delivered to customers. So that's why, customers probably see the smaller battery pack on the order of like, March or something, or February maybe. It's something on that order.
Okay.
And
thank you.
One thing these do trigger kind of like maybe points that are worth bearing in mind. As our quarterly letter indicates, the Model 3 has is the most efficient energy per mile electric vehicle out there. It's got the best efficiency. So we've got the best in terms of miles or kilometers per kilowatt hour, and we also have the lowest cost per kilowatt hour. This makes it very difficult for other companies to compete with Tesla, because we have the most efficient car and the lowest cost batteries. So I do encourage our competitors to really make a huge investment. We've been saying that for a long time. And then they're only in this competitive disadvantage because they didn't, we try to help them as much as we could, and they didn't want to take our help. But so they can use all our patents for free. They can use our supercharger network if they can just have an adapter for our connector or something. We want to be as helpful as possible to the rest of the industry. But the fact of the matter is, we made the investment in the Gigafactory and other companies didn't. And we put a lot of effort into having extremely efficient cars, which the other, having most efficient powertrains, and the other companies didn't. But I'm sure they will over time. But that's what has put us in quite a strong competitive position right now.
Fantastic. I think that's all we have time for today.
I just want to add
a
comment in closing. And Elon started with it, and I want to say that for myself personally here. I want to personally thank all the Tesla employees who worked incredibly hard this quarter and in prior quarters in each and every part of our business. Our results really are a reflection of the execution done in the company, by the company, and the passion that our employees have to deliver such results despite all odds. And I also want to thank all our customers and all our investors who have believed in us, in our product, and our vision of accelerating the world's transition to sustainable energy. So thank you from my side.
No, I'm good. All right. Anybody have any additional comments or anything? All right. Thanks, everyone. Look forward to the next call. Thanks.
Thank you. Goodbye.
Ladies and gentlemen, thank you for participating in today's conference. This does conclude the program. You may all disconnect and have a wonderful day.
And there you have it, folks. Whoa, what happened there? I got to pause that. All right, sorry about that. Okay, so we're going to do a bit of a live Q&A here. If anybody has any questions, go ahead and throw them into the comment section. I'm just going to invite some people off of Twitter here real quick. And let's see if we can get the count up a little bit here, if anybody goes ahead. Let's see here. All right, I'm going to bring up... just bear with me for just a moment. All right, just a little bit of a recap for everyone. This has been a long time coming for Tesla to finally get to some profitability here. So they have a GAAP net income of $312 million. So that is the raw net profit that they've made. Just to put that into perspective, you'll like this. Let me just back up here. I'm just going to pull up some data here. In June of this year, they had a loss of $621 million. So if you look at the reverse, that's almost $1 billion that they've been able to generate. So that is super exciting. Just to give you another perspective, in June of 2018, they posted $4 billion in total revenues. Now they're up to 6.8. So we're seeing 50% growth just about every quarter here. It's crazy. So that's really good. Let's see here. All right, let's see if we can answer some questions for you guys here. Any news on solar? Well, Elon did speak very briefly that they're still ramping up Gigafactory 2 to get the solar stuff happening. We'll be able to do some more stuff. We're going to talk more about this on the podcast tomorrow night, so people will be able to listen to that on Friday early, or maybe even Saturday. Oh, hello, Nutmeg. How are you? You want to come say hi? Hey, Nutmeg wants to say hi. Okay. All right, you're a good boy. All right, hop down. All right. Sorry about that. Distractions. Okay. Right. So solar. Let's see here. What else did I miss? I'm not able to listen. Well, you'll be able to listen to this stream anytime you like after it's done. It'll be processed and posted on the YouTube channel, on our YouTube channel. It takes about an hour for that stuff to process, especially something this length anyway. So just come back in a little bit, or maybe you can even watch it tomorrow and you'll be able to listen to the whole earnings call. And like I said, we'll be discussing more of this podcast on our podcast tomorrow night with our usual guests, and that'll be published as soon as possible after that. Okay, so let's get back to the questions here. There's a lot of people. Maybe I should pop out the chat here so I can read it better now that I have my reading glasses on. This is a little better. Okay, let's see here. Okay, Mike Schultz says, can you give a quick rundown of the new computer, what it might change? Already own a Model 3. Okay, so what Tesla's been talking about since the last earnings call is that they've been working internally on a new Autopilot computer system that is an order of magnitude, as they say, which is basically 100 times faster. It's able to process up to 2,000 frames per second. The current system could do 200 frames. And it's a custom silicon that they've been developing internally. So just so that everybody is not confused on this, that in order to get the free upgrade that you may have heard of, you need to have purchased full self-driving. That's the only way to get the free upgrade. So you can either purchase full self-driving at the time of purchase of the car, or you can purchase it after the fact. And then when they start producing cars with the new computer in it, well, it's just going to be built into the car. But in order to get the free upgrade, you have to have full self-driving on your bill of materials, either before or after the sale. I hope that explains what's going on. What it's going to really do at the end of the day is give them more processing horsepower to be able to enable full self-driving. It appears that because of the changes that they've been making over the last couple of years with Autopilot 2 and some of the false starts with the neural network, that it's been determined that they need more processing power. So about 3 years ago, they started working on a new a new computer internally to replace what NVIDIA has been working on. I think Tesla in a lot of ways is behaving more and more like Apple. They don't want to be beholden to anyone, so they feel that vertical integration, as far as that's concerned, is the answer. So I hope that answers your questions, Mike. Let's go down here and see what else we've got here. Mark Allen, were you expecting these results today? Well, you know, I'm not a financial guy. I don't really follow this stuff very, very closely. I was very hopeful and expecting to see some kind of profit, even if it was a little. Wasn't expecting these kinds of numbers, so that's definitely good. It just basically means that, you know, the spice is flowing here. The Model 3 is generating crazy good revenue for Tesla. And as far as I'm concerned, I just wish it shuts up most of the nasty, noisy negatives on there, the worst of the shorters out there who've been manipulating the stock. That should be illegal. I mean, yeah, Elon opened his big mouth on Twitter and said some some inappropriate things about taking the company public, and he's paid the price for that. And going forward, he seems to be a little bit more cautious. But I think it's completely and utterly ridiculous that the shorting people out there, the people that are the nastiest, can manipulate the stock, and they're not held accountable. So that's my say on that. Let me see here. What else here? Elon did mention, yes, I'm sorry, I can't pronounce your username. Elon mentioned the service will be a significant income generator, and we understood it to be break even. Service is always a problem with Tesla. They're largely out of production hell. Now they're in delivery hell, and along comes with that a lot of problems with service. I mean, I'm getting private tweets, and people are still waiting 3 and 4, 5, 6 weeks sometimes for parts, even for sometimes even the most basic things. I've experienced kind of that same thing on my Model X. I mean, minor little things, nothing really major and stuff. So Tesla really needs to get their service thing sorted out. We've got a lot of people coming into the Tesla fold that are not Tesla followers, have not followed their trials and tribulations, have no concept of how service is done, and these people are rightly upset. But unfortunately, I don't have a voice to be able to get to every single Model 3 reservation holder or buyer out there to try and explain to them, these are some realities you're going to have to face. This isn't Toyota here. They don't have, thousands and thousands and thousands of franchise dealers out there who are actually effectively doing all the service. Tesla shoulders the whole thing for them. So if you're looking at buying a Model 3, just go in with the realization here that service, if you need it, while generally good, may take some time to get things sorted out. So. Rafael Teslatino says, my first question, what is the biggest and most impressive item from the call for you? That's a good question. I think for me, it's really the whole profitability thing. That's, that was the biggest thing I was looking forward to on this call, was to see that Tesla is finally, crossed that chasm of being always in the negative, and the outlook is looking really good now. They expect, there's no problem with demand on Model 3. There's no slacking of anything. So now that the margins are above 20% on the car, they've got their costs under control. They're not spending quite as much anymore. I mean, if you look at the balance sheet here, where's R&D here? Research and development. In June they reported $386 million in R&D, and in this quarter it's 351. So there's some significant savings there. EV tax credits, as far as selling their ZEV credits, are not really helping the bottom line. It's about $50 million, I think. So at the end of the day, regardless if you took all that stuff out, they're still profitable. So that's a good sign. So if they can keep this up, and I believe that they will, they're on solid footing now. And it's taken Tesla 15 years to get to this point. Don't forget, they've been making Model S and X for the last 6 years. But all of that revenue has been going back into the company to try to grow the company. And now that Model 3 is really the volume car, not mass market, but a volume car for them, it's really starting to generate some cash for them. Early on, you're into negative margins on the car, because when you spend $2 billion to build a production line and you only make 100 cars a week, those cars cost a lot of money. So you get your production up to a certain level. In this case, Tesla really wanted to reach 5,000 cars a week, because that's their break-even point. Anything past that is when they really start making money, and that's really what's happened here. Let's see here. What else? Can we get the update on self-driving shorters are talking about? Base model updates. Spencer says base model updates. We are not expecting to see base model until at least first quarter of 2019. They did say that they are expecting to start production for European left-hand drive cars in January of 2019. Deliveries should start around February, March, a couple months afterwards, because, of course, they got to get on boats and travel the Atlantic and so on and so forth. So yeah, that's promising. I would suspect we will still see right-hand drive cars sometimes in mid-2019. Don't forget, the Model 3 has been largely designed to be symmetrical so that they can very easily move over the components that they need to. It's just resources are right now, they just can't build the cars quite yet. They have to get some of the production sorted out for the left-hand drive cars, and do that. So for those of you in Europe, it's promising. For the countries that need the left-hand drive cars, that's quite promising for that. Let me see here. Yeah, no words on simplification to build in the cars. No, the simplification at this point is streamlining their product options. And Elon just tweeted out, I think it was earlier today, that they are going to be streamlining some of the options on the Model S and X on the interior. Basically, in my opinion here, eliminating a color which is not selling too well, which is, my opinion, it's cream. Black and white is what everybody wants, so by eliminating that, they can increase their production. So in Model 3, we're starting to see just the first stages of them relaxing a little bit on the options. So now we have all-wheel drive, we have a mid-range car, we have performance car. They introduced the white now. Eliminated a couple of colors, increase the price of the red color, which I think is ridiculous, but that's not nor here nor there. But it's about efficiencies on production. It's not about simplifying the actual build of the car. It's about simplifying some of the options that they offer. Let's move down here. When does the medium range start production? They said 4 to 6 weeks, I think. So that's when I think deliveries will start. So it should be within about a month or so. We should start seeing the production of the mid-range car. By the way, I just want to put out a little plug out there. If you like what we do, please support us any way possible. If you're going to order a car, I'd really appreciate maybe if you use our referral code. That's Trevor41818. Helps you get 6 months of free supercharging, and it helps this guy get a better chance of getting a Roadster. I only need 22 more referrals, so if you guys just use it, we'll put us over that hump and I can stop bugging you. Appreciate that. Let's move on here. Let's see here. Any other questions? China factory. Well, the China factory, the Gigafactory. Now, I got to be clear about this, and Tesla doesn't talk about it too much, but the Gigafactory they're going to build in China is going to be a cell production / car factory in one. It's not just a cell production factory. However, they did say, and I took lots of copious notes here for our podcast tomorrow night, that initial production at the China factory will be largely capital efficient. And I read that as a tent, just like they did in Fremont, as soon as possible to start some Model 3 production, as soon as they get some basic walls and get some of the supply chain sorted out in China. They said that they don't expect to have cell production right off the bat in the Chinese factory, which leads me to believe they will be importing at least some of the cells from the Gigafactory in Nevada. And later on, once it gets cell production going at the Chinese factory, then it'll be kind of a wholly owned thing at that point. They said short term is kind of uncertain. Long term, that's what they want to do in China, but short term, it's kind of uncertain. Ken Lacrosse, thanks. Good luck with the Roadster. Yes, thanks, Ken. I'm working towards it. Like I said, I only need 22 more referrals, so shouldn't be. I mean, it'd be pretty exciting. Anyways, I don't want to belabor that point, but you know what to do if you need to help out. Let's see here. Will they make metal pedals for aftermarket? Stephen Sherman. Yeah, they do. If you're talking about the aluminum performance pedals, you can buy them off at Tesla, but don't bother. It's way too much money. You can just get them off of AliExpress like I did, or eBay for that matter. Actually, I bought mine from eBay. $28 for a set. Tesla wants 155 or something like that. It's ridiculous. And literally, I've seen both. The ones directly from Tesla, and I've looked at mine. Same damn thing. Don't waste your money. Go on eBay, go on AliExpress, just buy the set. They clip on. Takes 5 minutes to swap them out. They look good, but they don't really help anything. I don't know why they call them performance pedals. Just they don't make your car any faster. But anyway. Michael Cohen, prototype Model Y is being produced right now. Presentation in March. Yes, Elon just signed off on the production of the first Model Y prototype. This is not production of cars. This is just the first 1 or 2 cars that they will show. I think the scuttlebutt going around right now is that we will see the Model Y being introduced around about March 15th. We don't have a firm date yet, but that is the number that's floating around. I am planning on being there. I have enough referrals, of course, to get the invite. We'll probably bring a couple of guys from the podcast along with us. We'll see what happens when the time is right. But yeah, I'm fully expecting to go down to Hawthorne at the design studio, because that's where they do the intros. It's not in Fremont. to be able to see the Model Y. So when we go to that, we'll do some live streams and we'll have some fun with that. So we'll bring you all the good news on that. So just make sure you subscribe to the YouTube channel, otherwise you won't get the notifications on that when the time comes. Don't worry, I'll pester you. Just make sure you follow me on Twitter too to get the updates. And yeah, we'll go from there. Let's see here. New wording found today. So Alex says new wording found today. AP pricing is now subject to change after delivery if not purchased at config. Check Tesla's website. Yes. Now I just checked my account and I see a Canadian price of $6,600. I forget what it costs in US. I think I'm going to do some math here. 66 sounds about 5,000, right? Yeah, that's 5,000 US. So, yeah, I'm torn. I don't know what to do, whether I should spend the money and get it or not. I still have some money in my Tesla credit account from when I took one of the awards was a Powerwall, and I said I can't use a Powerwall. So they gave me a monetary credit, which I used to buy the warranty on my car, and there's a little bit money left in my account. So I don't know what to do. Whether I should upgrade the Autopilot computer for full self-driving, or maybe if this main control unit becomes an upgradable item, that's something I could probably do there too. I don't know. We'll see. Haven't decided what to do. Jay says get the MCU upgrade. Yeah. I'm debating that. Tesla Canada told me that they're waiting for official announcements or availability from California to see if that's even possible at this point. So I don't know what's going on. I'm getting my screen changed next week because my screen is one of the cars that was in a batch that has developed the yellow ring of death. There's a very faint yellow line around the edge of my screens. It's cosmetic. It doesn't affect anything. And I brought it to their attention, knowing full well that it was a problem. And they said, yeah, no problem, we'll fix it. So I've made an appointment. They're going to switch out the screen next week. So, which is why I asked them at the same time to see, is there an MCU upgrade? I mean, if you're going to tear open my dash to get at the screen, you might as well change the computer at the same time. And they said, well, we'll get back to you on that. Eric. Hey, Eric, how you doing, buddy? Eric Camacho's in the house, folks. He's one of the people that's on our podcast. You'll be hearing from him tomorrow night again. He took a little bit of R&R, and now that he's back, we'll be having a lot of fun tomorrow night. 3K. Oh yes, Chris Curran says it's 3K purchase, 5K afterwards. So yeah, there you go. So my price is after purchase. I don't have a choice. I can't get the discounted price. So yeah, I gotta shell out the big dollars to get the FSD upgrade if I want that. Jonathan Como says, what did you make of Elon saying service could soon be a source of revenue as more vehicles come off a warranty? I thought that service was always supposed to break even side of the business. Yeah, you know what? That's right. You know what? I originally took that as being break even in the sense of warranty work, but after that, I mean, you got to make some money somehow. Look, I'll just put it this way. It's Tesla. They changed their minds. They changed their minds about supercharging. Remember, they said supercharging will be free forever. No, it's not. Service, it's not about making money. Well, guess what? They changed their minds. So just as I said to somebody else today on the internet, I mean, if you see something you like in a Model 3 at the price point that you can agree with, don't wait. Order it right away, because God knows they'll change the price on something. The other bit of that too is that once you buy the vehicle, stop looking online at the prices and the options, because you'll just be upset because they'll change something in the future. The price might go up, they might go down, and you're just going to be upset as it anyway. So number one tip, if you're buying any Tesla, the moment you press the order button, stop looking at the website. just all this gray hair that comes from something. Anyhow. Eric says, waves hello. Hello, Eric. How you doing, buddy? We'll talk to you tomorrow night. Let's see here. Any more questions, folks? Let's do a little bit more, maybe another 5 minutes, 3 minutes, 5 minutes, and then we'll sign off. You're welcome, Jonathan. Anybody else questions, please put them into the comments here. We'll do our best to answer as best we can. I have to wear my reading glasses, otherwise I can't see this. Typeface is too small. Maybe I can make it a little bigger. Oh yeah, there we go. Sometimes I forget about Command+. James Oliver, yeah, I got lucky and got my all-wheel drive for 4K. Now it's 6K. Yeah, you are lucky, and this is one of the points I try to make to people. When they introduce a new feature, jump on it right away, because if it's a feature that people like, Tesla will adjust the price to either curb demand or take advantage of you. And I'm sorry to say that, but largely that's what they're doing. They're changing prices as they go, because when they see demand spike for something, then it's like, well, it's an opportunity to make some money. So the first rule of Tesla when it comes to this stuff, they are disrupting the car industry in more ways than one. Prices are not fixed with Tesla. Sometimes they move around. So yeah. Michael Conan, so how certain are expectations about European deliveries, do you think? Well, it is Elon time. He did say January production start for left-hand drive Model 3s for European market, delivery starting February, March. Take that with a grain of salt, maybe add a couple of months just for safety. I think largely, like I said, they're out of production hell. Now they're in delivery hell. So once they keep satisfying the rest of the North American market for a little bit, then they'll have a little bit of breathing room. They did say that they may end up bringing another production line online to help with some of that stuff in the form of capital efficiency. That is code word for tent. Maybe another tent. We'll see. So yeah, I'm optimistic. You guys have waited long enough. Trust me. It's about time that you guys get the cars. Some Rich rebuilds, real talk going on here. Yeah, well, you know, Rich is a real funny guy. I like him a lot. Yeah, but can't wait to watch his next video. You guys watch his rants? He's hilarious. He's a great guy. Jay says, what in God's name are you going to do with a car that is twice as fast 0 to 60 than my own performance Model 3? Tesla Roadster is going to blow your wigs off. Bragging rights? I don't know. I don't know. Midlife crisis mobile? I don't know. As I said, if I get this Roadster, and please use my referral code if you like what we do. You get free supercharging. I get a chance of getting the Roadster. I've said it before. I'm going to take it on a North American tour so that everybody gets a chance to see this car. You have to remember, a Roadster at this pricing, to buy one of these cars, the Founders Edition is what I'm gearing towards, is $250,000 US. That translates to $325,000 Canadian. There is no way in hell that I would be able to afford a car like that. So if we get this thing, the least I could do is to return the favor, take it around to show people. We're talking about a car they're probably only going to make 2,000 of these cars a year on the cost alone. This is not Model 3 at 500,000 cars a year, folks. So this is going to be a relatively rare car. So if we do get this thing, as I said, I will promise my wife and I will take a North American tour, and we'll get everybody a chance out there to get a chance to check out the car in person, because it's going to be pretty rare. So yeah. Yes, Eric, $325,000. And if we were to buy it retail, it's another 13% tax on top of that. So yeah. Put that in your pipe and smoke it. You're welcome, Michael. You're welcome. Oh, Diego, this is a good question. Diego Almora, is the $1,000 first day reservation holder still subtracted from the price because I don't see anymore? Yes, absolutely it is. If you order a car, you have to give them a little extra. In the US, it's $2,500. In Canada, it's $32, I think. When you get your bill of sale, the $1,000 deduction or reservation deposit is deducted from the price of the car. So fear not, don't worry about it. That money is applied to the car. Yeah. Let's see here. What else? Alex, so do you get the Roadster and your wife gets the X? I don't know. We still have our reservation for our Model 3. We are not spending any kind of money to get first production or anything like that. For the amount that my wife drives her car, it does not make any financial sense for us to be buying a long-range Model 3 or an all-wheel drive or anything like that. It has to be the base model car. So that's what we're waiting for. When it becomes available early in the spring, we will make a determination as to what we do. So that's where we stand on that. I get that question all the time. Why did you buy a Model X? I thought you bought the Model 3. I've explained that many, many times. The Model X is what I always wanted, could never afford, but after saving for 4 or 5 years, look, you can finally get the car that you want. And for the time being, because I'm still running my business, the Model X fits my needs better than a Model 3 does at the moment. I would love to have a Model 3 as a runaround. The Model X is our daily driver. For my wife, when she wants to buy a car, she wants to get something electric. It's just the matter. It's all about money. So that's where we stand at this point. We're one of those people that are waiting for the $35,000 car. So that's why we don't have one yet. As far as what happens with the Roadster, I don't know what's going to happen. The Roadster is not going to be a daily driver. That's for darn sure. That is going to be a fair weather car. So we'll see. Yes, you guys, yes, I know. 13% tax is a deal compared to Europe. I understand that. I get that. But still, it's a hell of a lot of money. Let's see here. You'll be Jay says you'll be a 3 Tesla family with the Roadster. We'll see. We'll see about that. I may end up having to sell a car if we have a tax exposure on that thing. That's still unclear. I've tried to ask Tesla about our tax situation in Canada, whether they cover it or not. In Canada, lottery winnings are tax-free. There's no tax encumbrance with that. So I tried to reach out to them to see, if you win a car from Tesla for referrals or whatever the case may be, is there a tax exposure? So I'm waiting to hear back on that. If there is, we'll have to figure something out. I don't know. Let's see here. Don't give up your reservation. Maybe key to get the cheap one. Yes, I know. Like I said, I'm not giving up my my reservation. It's been sitting there. It's not like I need the money at the moment, so we're good. We're going to hold on to it for as long as we can. James Oliver, how much more time do you have to earn the Roadster? That's a good question. Don't want this live stream to turn into a Roadster discussion, but since you guys are asking, I'll give you some details. I reached out to Tesla to ask the referral program folks what's going on with the Roadster situation, and they were able to confirm 2 things for me. First of all, right now they don't have a cutoff date as far as when they're going to cut off the earnings towards it. It's my belief that when the car actually goes into production and it's ready for delivery, that is when your accumulation will effectively stop. That's my opinion. I don't have confirmation to that. Interestingly enough, they were able to confirm to me, however, that each referral that you get earns me a 2% discount on the car, and should I not reach 100%, that I don't lose those referral credits towards the car. So let's say I get to 80%, I can get a Roadster at an 80% discount. So where my cutoff stands as far as out-of-pocket expenses if I want to actually buy the car, I think it would be a shame to not actually get the Roadster if we got that close, because let's say the car out-of-pocket costs, I don't know, $50,000, $60,000, and I keep it for a year and decide to sell it. Well, there's some equity in there. So I think it would be crazy not to actually get the car if we got pretty close. But time will tell. But that was a question that I had. I thought, if I got close and all of a sudden they cut you off, or they cut off the program, what happens to those earnings? Well, apparently they don't disappear. So yeah, that's where I'm standing. At this point, I only need 22 more referrals to get this car, so it shouldn't be that hard. I appreciate if all of you, if you like what we do and stuff, it doesn't cost you anything. If you order a car, just use my referral code. It's Trevor41818, and just give that. Even if you ordered a car recently and you didn't order it with a referral code, you can just call your delivery advisor before you take delivery of the car, and they can add that code to your order, and it helps me out and helps you out because you get the free supercharging for 6 months. All right, enough of the Roadster. Let's move on. Can we have both the key fob and the card? Yes, you can. Now, we haven't seen the key fob being available quite yet, but it's just a Bluetooth device. So just like in the car, you can bind different Bluetooth phones to your car. you'll be able to do the same thing for the key fob. Now, why is there key fob on the Model 3? Well, there's a lot of people that have Android phones out there, and Android is flaky at times when it comes to Bluetooth. I know this from experience because I had several different Android phones over the years, and trying to do Bluetooth streaming to my car was always hit and miss. The iPhone seems to be rock solid largely. So I know a lot of people have Android phones out there not ready to upgrade a phone or switch or whatever the case may be, just to get the car to unlock properly. Maybe they find the key card a pain in the butt. So that's why they have a key fob, and that's coming very, very soon. It was approved. It's been approved in Canada, so it's just a matter of time until it becomes available. If there's a cost, I have no idea. If you're interested in that, call your local Tesla service center and ask them about the key fob. Get your name on a list if that's what you're interested in, and I'm sure they'll contact you when it becomes available. Angel, 80% of the car at 350,000. Hey, look, we're not talking about the Roadster anymore. Yes, my math is off. I just threw that out there. Michael says Bluetooth and Android has been significantly better once version 9 of Model 3. No issues. Great. I'm glad to hear that. Good, because let me tell you, our forum has been flooded with people having all kinds of problems with Bluetooth. I don't wish that on the worst enemy because Bluetooth can be a little bit pain in the butt sometimes. But yeah, that's good. Well, I've been at this for almost 2 hours now. I'm going to finish the live stream right now. You guys will be able to rewatch it once it finishes processing on our YouTube channel. So if you missed the first part of it, where we cover the whole earnings call, you can listen to it anytime you'd like. So just give it about an hour or so to process once I finish this. And we're going to do our podcast tomorrow night, so we'll be able to talk about more in depth with this with some other panel members. So we'll leave it like that. I'm going to sign off tonight, and thanks for watching, and folks, and don't forget to like, share, and subscribe. Subscribe to our YouTube channel. Every little person helps. And again, if you're ordering a Model 3, help us out. Use our referral code. It's Trevor41818. Anyways, thanks for joining in, everybody, and we'll talk to you soon, okay? Good night.